This is going to change everything, as one Ripple insider has now confirmed that Ripple is likely going to enter the Forex or foreign exchange market, which will likely be tied to the XRP token for liquidity. Now, if this happens, this would create insane amounts of value for the XRPL ledger and the XRP token itself, as between $5 to $6 trillion are traded daily in fiat currencies globally at the Forex market. So in this video, we'll be discussing what the insider shared and how that will involve XRP. We'll be sharing some key insights from lawyers on the potential SEC appeal from both crypto-friendly lawyers and even some insight from a lawyer directly at the SEC who wishes to remain anonymous. We'll be talking about monetary policy coming from the Fed and what their likely stance on interest rates in October means for markets and crypto. And of course, we'll be covering the recent price action on XRP and why it's so important that you pay attention to XRP this month, because we expect it to be a very big month for crypto. So as always, if you're feeling blessed and bullish, comment 777. And if you're going to be the richest person in your family tree, smash the subscribe button. Before we dive in, a quick reminder that the opinions in this video are for informational and educational purposes only and do not constitute financial, legal, or investment advice. All investments, including cryptos, carry risks and potential losses. Always do your own research and consult with a licensed financial advisor. We are not licensed financial advisors, and relying on our content for financial decisions is at your own risk. By watching this video, you agree we are not responsible for any losses or damages, and we do not guarantee any specific results or outcomes. Some of the links below may be affiliate links, and we may earn a commission, which actually helps support this channel and helps us to create value-based videos like this. We also hold some positions in the cryptocurrencies that we talk about, but that's only because we do what we believe in. However, this should not be interpreted as a recommendation for you to do the same. With that said, let's get into the video. Hello and welcome back to the channel. My name is Paul, and we're going to start this video specifically looking at inflation because it's closely tied to what the Fed is going to do with interest rates. Then obviously the job market is another major portion in how they make decisions, and all of those decisions that the Fed makes ultimately affects TradFi markets and crypto markets, considering crypto markets are closely tied to TradFi markets, being that they are risk on asset classes, according to most fund managers, institutional players, people with the money. In other words, yes, crypto is volatile or more volatile than traditional markets. However, they trade pretty correlated up to 66% of the time. So we do want to pay attention to this stuff. That said, currently inflation from an aggregate rate is still flat at 25 to 26%, and it's consistently remained there since back in 2023 when we were at about 23%. It only came down and bottomed around December of 2023 before continuing to make new highs. But generally speaking here, even since 2020, the aggregate rate of inflation was like 1 to 2%. We are currently so high that people are genuinely getting squeezed out of their savings. They're getting squeezed out of homes. If they are a young person who cannot afford to only live, but now not buy a home, groceries cost more, gas still costs more. Things are not really looking good for the average consumer. So now imagine you have a situation or an environment where companies can't actually borrow or service debt. They can't expand and grow because interest rates are still too high. And so what that creates is a weaker job market, because companies that aren't typically getting as much revenues or income in because inflation is obviously very high, then eventually they have to start letting go of employees. And so in this article, they say the biggest risk to a soft landing might just be Jerome Powell and what he does with interest rates. Nearly 40% of the 32 economists surveyed cited a monetary policy mistake as the greatest downside risk to the U.S. economy over the next 12 months. Now, that said, as of Monday, the 30th of September, Powell did talk in Nashville, and he did offer a clue saying that the Fed is aiming to move monetary policy to a more neutral stance. That means they're kind of going to be at the ready and just watch things as they develop, but that doesn't really necessarily mean they are being proactive proactive, but instead reactive. In other words, if we do get some sort of a major crash in the economy, they're going to lower interest rates really fast. If we don't, they're going to keep interest rates relatively higher. And I think that's going to continue to squeeze the economy, which is why people are kind of worried. Generally speaking, a lot of these economists think that there might be an issue in the Middle East with war, which can create a risk. 55% of them said the U.S. economy is more likely to perform worse this next year, though 66% still said they don't expect a recession until at least 2026. Whether Powell is a hawk or a dove is in the eye of the beholder, but the bull market remains intact. And this seems to remain true as we continue to put in new highs over the last even 3 weeks. Although there has been a lot of fear in the markets, there has been some volatility looking back at September 3rd through the 9th. Generally speaking, the last 4 weeks or month have been a bullish month. And that bullishness is finally starting to show up in Bitcoin as well, and the crypto markets, as Bitcoin hit a low of about 54,000 and then pumped all the way up to a high of $66,500. Now, when you take a look at the betting markets, the majority of people are sitting at about 25 basis points of a decrease or a cut in interest rates. Last month, we did about 50 basis points. They're expecting 25 basis points or 0.25%, and that's to the tune of about 63% of people. Now, a dude by the name of Austin Goolsbee, who works at the Chicago Federal Reserve Bank as their president, stressed that the Fed should not wait until the labor market weakens to take action. And according to him, the economy has returned to a more normal state. In other words, interest rates should reflect that. So his biggest concern is an overly tight monetary policy, which could stifle economic growth and the job markets, which could create some serious strains, which we are seeing, and I'll show you here in a second. However, he acknowledges that inflation remains a concern for some members of the Fed, and he is confident that inflation is being tamed. However, I don't really think they're looking at the aggregate. I think they're looking at all of these other data points and factors, which keep people like me and you, or people in markets with a boatload of money, totally fine and happy. Oh, look, we had a positive economic reading. Inflation's coming down. Now they're going to lower interest rates. Everything is just fine and dandy. Yet at the end of the day, I do believe the gap is widening between the middle class and the poor, and those two are being widened even further away from the very rich and wealthy. This is not something that we see typically in very healthy or young countries with, young fiat currencies. These are the types of signs that we see in failing nations near to the end of their lifespan. Now, I think one of the most interesting economic indicators that we have are the JOLTS report, or the job openings total non-farm jobs. And we are going to get that today, October 1st, Tuesday, the JOLTS job openings report. And in this report, just so you guys understand what it is, it basically states that there is a specific position exists and there is work available for that position. The job could start within 30 days, whether or not the establishment finds a suitable candidate during that time. There's an active recruiting for workers from outside the establishment location that has an opening. A reading that is stronger than the forecast is generally supportive or bullish for the dollar, while a weaker than normal forecast reading is generally negative. So to put that into perspective, whenever there's a major decline, that means there are less job openings and less of those jobs are being met. And so typically in a recessionary environment like 2007 through 2009, you can see we are in a decline. Yet again, during the pandemic, you see a massive spike down and a decline. And right back here, since February of 2022, this report has consistently declined for a major downtrend. Then when you track that against the S&P 500, you can see in similar fashion, coronavirus pandemic, down. Then back in 2007 and 2009, you can see this right here, down here is the S&P 500. This right up here is the JOLTS. Where my lines are, and I'll try to get them, relatively even right here, you can see that we see the market continuing to crash or collapse while JOLTS continue to trend down. Now, what's really interesting, and I would say different than the last few times, is the fact that since October of 2022, where the JOLTS have consistently declined, we are seeing a negative correlation where the S&P 500 continues to rally. So something isn't right here. Whether it's the JOLTS or the S&P 500, eventually I do expect them to look like one goes down, the other goes down, or for a positive correlation. But I think this is exactly why people are at the Fed are so torn? Do we continue to keep interest rates high to really tame inflation so we don't actually screw up the world or the economy for the middle class and the poor? Or, right, do we start lowering interest rates now so markets can finally take a breath, but then inflation remains relatively high and ultimately either way we experience some sort of a collapse? We don't really know, but I do believe based on the data that I'm looking at, whether or not this type of stuff is happening, whether or not the jobs market gets weaker, it does look like we are in for a full-blown end of the year bull market. Now here in 7 short days, we are expecting some news surrounding the SEC lawsuit and whether or not they are going to appeal the ruling, which is coming up to a close. Gary Gensler is a total wild card. We know he hates crypto. We know he's not a fan of XRP and Ripple. And so people are kind of expecting him to appeal. That said, a guy by the name of Mark Powers, who's a blockchain professor, said, I believe the SEC will appeal. I would think it would not want to have the programmatic trading analysis stand. Then from an SEC enforcement attorney who wanted to remain anonymous, he said everyone over there at the SEC truly believes that this decision is wrong, and this is coming from the judge or the judgment, that it's not good law and should be appealed. The lawyer who spoke on the condition of anonymity said, I think most securities lawyers, regardless of how they feel about crypto, would agree it wasn't a very well regarded ruling. To which a pro-crypto lawyer, Hogan, explained that because the Ripple case involves a fixed set of facts and circumstances that deal with more than just programmatic sales of XRP, it may not be the smartest case for the SEC to appeal if it's looking to directly address those sales. So based on all the facts and information that we have, it's not out of the cards that there is going to be an appeal at some point here in the near future, and I do believe it will negatively impact the price of XRP. I do think we'll see a little bit of a dump only on XRP in that day, but if the dump remains relatively small, right, let's just say for whatever reason it's not a massive dump, the price goes from 65 cents down to like 59 or 58 cents. That would actually be a very good indicator of major strength or underlying strength and a lot of buyers stepping in to buy a dip, right? It's a dip buying opportunity. It's not a true sell-off or a bear market type move. To which, if there is an appeal, I will be buying more XRP if I see strength and I don't see crazy selling. Now for the major news, which I think is probably one of the biggest developments that I've read of recently. A dude by the name of Tony Edward from the Thinking Crypto podcast recently spoke with a former Ripple employee at Mainnet. And this was posted very recently. We're talking September 30th. This person was a part of the team that developed Ripple's ODL product. And he asked them about the upcoming RLUSD stablecoin and whether they think it could negatively affect XRP. They mentioned that they had advocated for Ripple to launch a stablecoin years ago. The stablecoin business is arguably one of the best businesses in all of crypto, maybe outside of exchanges, but only exchanges that have serious amounts of volume, security, right? They have the proper practices in place surrounding their reserves. So on that note, the stablecoin business is one of the best, and it's amazing to see XRP and the team at Ripple finally entering that space. But paraphrasing their response, they said that the stablecoin will actually be beneficial for XRP as it will be paired with it. XRP will help provide the stablecoin with greater liquidity since it is available on all exchanges. Additionally, this pairing will help stabilize the stablecoin and prevent depegging. They also stated that the stablecoin will open up a new use case in Forex and much more. So imagine now you're going to use a stablecoin to trade Forex pairs. And as a lot of that money flows into this ecosystem and space, this is tremendous. As the Forex market has an industry value of $2.73 quadrillion traded yearly. I've looked at stats. It's between $5 to $6 trillion that are traded daily between hands. But the global trading volume is absolutely insane. Here it's saying $7.5 trillion in April of 2022. Forex is the only financial market in the world to operate 24 hours a day, except for obviously crypto. But we're talking a TradFi market. This is an older market. It's not a new market. And this was developed at a time where it was kind of crazy to think of any market being open 24 hours a day. 7 currency pairs make up 85% of the Forex Forex markets. So imagine now RLUSD is being traded against the Forex markets while it's pegged to XRP in some way, shape, or form for upwards of 85% of the biggest currency pairs in all of Forex. This would be tremendous for the value of XRP, especially as now the bull market seems to be back in full flare. Which brings me to the price on XRP. So a lot of folks have been looking at this little triangle or wedge that we've got here. A lot of folks have been pointing out the fact that we just broke out of the wedge, right? Especially if you're talking about touching all of these major or local highs right here for a series of lower highs, but also higher lows. So this breakout was relatively significant considering we are now back at a resistance right in this range here at about 64 cents, something that we brought up plenty of times on the channel. However, when I really remove this and I kind of zoom out, I think it's also important to note that we haven't fully or truly experienced the breakout that we're waiting for. As we touch all of these major local highs and the most recent high on July 10th of 2023, we are waiting to break above this trend line right here, right? And we can get really tight and perfect on that range, but at the end of the day, volume from a weekly time frame is continuing to decline. Now, this may be the tail end of it. Relatively, we are still relatively weak on a weekly time frame relative to Bitcoin. So when we look at the daily time frame, however, since July 12th of 2024, on a daily time frame, we are stronger relative to Bitcoin. And on the volume, when you really look at the increased volume on the buy side with these bigger green candles, this is a good indicator, right, that this price action is legit and true. So as we mentioned recently, we had a support right here at 57 cents. We wanted to see the price remain and maintain this range right here. We have done that. So even if we did see some volatility surrounding an appeal or whatever, and we dumped right back down to, let's say, even 51 cents, but we saw some strength and buying in this range here, and then maybe a wick and some movements right back up into the 55-cent range or even the 57-cent range, I think that would be extremely positive for the price of XRP, and it would be a good indicator that this is a stronger market than we expect. That said, I still would like to see the price break above the 64-cent range and pop right up to the 74-cent range. And I think this 74-cent range is really where it's make it or break it time. Right up here, we have a confluence of a resistance on a horizontal range dating back to July of 2023. Then we have a 6.5-year resistance dating back to 2018 in January. I think this is truly going to be the most pivotal moment for XRP. And if we break out, and I believe when we break out, we're going to see some serious volume step in to the tune of many, many millions of dollars on a small exchange and probably $100+ million on an exchange like Binance, that things are going to look really, really hot. But again, we have not done that yet. So although this is very positive for XRP, we are still kind of in a range where it's good to accumulate, considering the fact that we look to be painting a new trend. And where we're really going to get that complete and total confirmation is at any price and close right above this line right here that I'm going to put at about 64 cents, okay? So 64 cents seems to be the range where we're seeing a lot of resistance. The good news is this does look like an inverted head and shoulders. It is not complete per se, but this is a clean enough head and shoulders that I would argue, yes, the strength is there. Yes, the volume is confirming. Yes, we have a good amount of relative strength. So yes, it's likely we're going to hit the 74-cent range. And if you just wanted to play that trade, okay, and make a few bucks, maybe even on a bit of leverage, which, by the way, this is not financial advice. This is for total degenerates. This is for people who are okay losing money. I'm not guaranteeing anything. You'd still be up 15% and more on leverage. So that's an easy play in my opinion, which is something that I will be taking. Now, I will have a tight stop, probably right below this range, totally fine. But at the end of the day, this looks like we are very healthy. The momentum is there. The market is looking bullish. And so whether or not we get an appeal, I'm really not too worried. I'm still going to be playing into this. So if you enjoyed the video, go ahead and click on the link below in the description, bullrunners.com/cryptoland. And in that link, you'll be able to discover how to earn crypto in less than 10 minutes with the #1 play to earn XRP game. You can watch this video, explains exactly how you do it. We have people in the community earning between 1,000 to 2,000 XRP per day. It's pretty impressive stuff. I'm not saying you will, right? They have a bit of cheddar in it, but you can do whatever you're comfortable with, totally fine. And you do it in 3 simple steps. You get an XRP wallet, you get your game pieces, you play the game to earn crypto, and the crypto is directly convertible for XRP, or you can hold on to that crypto in the XRPL ledger. So pretty straightforward. We explain everything that you need in these videos. And so if you had any questions, it's all here. I highly recommend that you watch the videos before you go and do anything, just to be safe. And so you feel confident and comfortable. But if for whatever reason you have any questions, just reach out to our support, or down, just reach out to us on the channel. Whatever you need, we're here. That said, go to bullrunners.com/cryptoland in the description below. You can just click that link. It makes life a hell of a lot easier. You have nothing to lose and everything to gain by checking it out. You can put your XRP to work. You can continue to compound or stack onto those XRP bags. It's absolutely phenomenal. So thanks so much for watching this video. I appreciate your time. Subscribe if you haven't already, and I look forward to seeing you in the next video, my friend. Goodbye.